Yo, what's going on, YouTube? So, welcome to another great morning this morning. I'm your host, Matthew, and I'm going to be going through my report this morning. I know I'm kind of starting off really early, probably a bit too early to be honest. I don't think anybody's up right now. But yeah, we're going to get this going anyways. I might do something a bit later. I might do this again. Um, who knows? This is quite fun for me. I get to put myself out there and create presence, you know, something for people to remember me by. But anyways, yeah, let me get right into this report. So I did kind of just glance over it very briefly, and it looks okay, but we'll see. All right, so let's talk about the metals markets today. This is January 25th, 2026, and we're going to be looking at what's happened from roughly late morning yesterday from when I streamed up until right now this morning. And over that window, this single biggest critical signal is that silver has indeed decisively moved up to those triple digits. The market hasn't opened yet, and with the spot pricing still, sitting around those levels from when it closed. Um, it's what's the headlines are definitely saying is that you've got a combination of chronic supply deficits meeting persistent industrial demand. And so, especially from solar standpoint and the dollar environment that's not really providing the same headwind that it did many years ago, things are definitely shifting. And at a macro level, this is what a monetary release valve really looks like. It looks like a capital that doesn't fully trust policy. It doesn't really fully trust its fiat system and is looking for a more scarce, non-printable collateral. And for silver buyers or even the Bitcoiners, that might mean that the metal that you used to think of as cheap gold is actually now functioning more like a high beta monetary asset with a real industrial backing behind it. And this is also a reminder that scarcity is not just about um, simple blockchains anymore, like uh, Bitcoin or Ethereum or stuff like that. It's also based in reality, sort of a wake up call for even the Bitcoiners. And when the real world assets that have a finite amount above ground float with different repricing, it behaves more like a hard capped protocol token more than anything else. And for the SolShotSilver ecosystem, which is my website, this is exactly the type of environment that the platform was built for. Every ounce is a scarce physical unit. I've been building my website for about 5 or 6 months now, about half a year, and yeah, I started buying silver when it was in the around the mid 30s. But yeah, my customers will effectively be getting paid in crypto, but I don't like to say that. They're more of like a rewards sort of token. And to own something that the market is now recognizing as a structurally scarce is actually quite a smart move. And this is just the starting point because once silver breaks that $100 range, the next logical question starts becoming that uh, is the market asking whether this is sustainable or is it a blow off that means reverts are going to be quite hard? And I'm going to get a drink real quick. Give me a second, y'all. All right, let's stay with the idea um for silver for a minute. Oh, because the other side of this news flow between the last day and now is really all about the pullback risks and the possibility of a retreat back towards the $90 zone, which in my opinion isn't too out of question, to be honest, because I mean these moves that we are experiencing is quite radical and unprecedented for silver, and not necessarily good either. But when you talk about like legitimate repricing of an asset and the real world scarcity of it, it really starts to matter. Some research desks are already flagging that it's overbought condition, that it's in overbought conditions, and it's warning after crossing $100 that silver could easily slip back into that low $90 range in the very near term as positioning gets more cleared out. Um, the charts back that up as well. It's saying that you've had a very vertical move this week, like I was just saying, and implied volatility is indeed elevated. So yeah, volatility is definitely elevated. If you understand volatility, that is a agreeable statement. And a lot of the late longs are actually now more sensitive to every tick. And at the macro level, this is what a very young bull market looks like before it takes off. So the path is quite jagged right now, but the narrative is showing. I've never heard this expression before. This is actually why I'm enjoying this because I'm like reading and understanding new things. I'm going to look this up. Whipsaws. Whipsaws between historic breakout and danger of correction. Let me search this. It's just a two-person hand, so I know what that is. Metaphorically describes a situation where an asset's price moves rapidly in one direction before quickly reversing into the other. In finance, this volatility causes losses, particularly for short-term traders. Wow, that's very interesting. So it's just basically saying that it doesn't know where it's going to go and it's going to wreck everyone. That's kind of awesome and scary at the same time. But anyways, yeah, between historic breakouts and the danger of correction, and the weak hands will get tested almost immediately. Yeah, that's what I was just saying. People are going to get wrecked. For the silver buyers that are connected with my website, that short-term volatility doesn't really change the underlying thesis that we're in a structurally tight market, defined by a multi-year deficit and rising industrial demand. Like I was just saying before, it just changes the entry point and the emotional experiences of onboarding into a more scarce asset. And for crypto users, this is the kind of two-way action that should feel similar, or I'm sorry, not similar, but more familiar to you. It's the same exact playbook that you've been seeing in Bitcoin and Solana many different times, where the big breakout is often followed by a sharp retrace before the trend reasserts itself. And for my website's model, the tokenized ounces, which I don't really like to reframe it like that because people are buying real ounces of silver and they are getting shipped real ounces of silver. And they also do get real crypto rewards on top of that. So it's actually very useful. And you can I can position the platform as a way to accumulate real silver into various pullbacks while the reward layer in crypto effectively um, dollar cost averages people into the digital side of the trade. Now, the convergence piece is very simple. Instead of choosing between buying the dip in physical or in tokens, my users are expressing both scarcity trades at once at the same time. and owning a finite metal and a finite vault with an on-chain representation that fits into a more broader portfolio. So when the media headlines are going to flip between euphoria and then caution, my script can calmly emphasize the ownership discipline for its users and the volatility to improve my cost basis in the scarce tokenized assets and not to abandon the actual thesis. So that's what I'm rolling with, y'all. And all right, so let's connect into Silver's more direct. Let's connect silver more directly into Bitcoin and the more broad crypto complex, because the last day of data is actually telling us a very specific story about relative performance. So we've got reports pointing out that the silver surge through $100 has actually added more percentage upside in a week than Bitcoin's actually delivered over that same exact window period. And even with the Bitcoin trading in the high 80,000s to low 90,000s range, Bitcoin has been grinding sideways rather than acting like a clean inflation hedge in this particularly risk regime. So while gold and silver has grabbed the headlines and the safe haven flows, Bitcoin's just been floating. But Bitcoin is expected to be catching up once um, people are starting to catch on that people need to start owning something that is more um, finite and less inflationary by design. And so that's where we move from the Western Keynesian style of economics into the more, Austrian style side of economics, the Eastern side of economics. And so this isn't something that's new to anyone. If people are curious, this whole theory of Western and Eastern economics has been around for a very long time, and it's sort of a natural flow that happens within the world. It's been going on for thousands of years, and it's not necessarily a new thing. And but it still sits in a vault. Um, okay, let me back up here. Um, So while gold and silver has grabbed those headlines, safe haven and the safe haven flows, which are the Eastern Austrian style of economics, the macro-wise within all of this, okay, this tells us that the markets are differentiating between digital scarcity narratives and the physical collateral that can move across um, refineries, mints, and vaults. So when fear levels are at a high, um, that's that's when this stuff starts getting differentiated. Let me get a drink real quick. So, what does this mean for the crypto users? Seeing Bitcoin lag while silver explodes is a reminder that having diversification across both tokenized assets and physical, purely digital assets. All right, let me back up there. Can smooth out the path of having diversification across both tokenized physical, which I don't really agree with. I have physical silver that I ship people, so it needs to understand that better. This isn't a tokenized thing. This is a legitimate thing. It's not. So the purely digital assets can smooth out that the path of returns without abandoning the whole entire scarcity thesis entirely. For my website, this is exactly the type of bridge that I'm building. I'm building a platform that lets someone own um, the real stuff, which is vaulted silver, as their physical safe haven, while also receiving crypto rewards. So whether it's Bitcoin or Solana or another supported asset as their digital upside stream, I'm hoping that my token and my platform can be a real safe haven for people. Perhaps in the future. It's not necessarily right now. I have no users, and I'm trying to build it up in a way where it's going to be legitimate. Once I get my first user, or my first users, I will indeed like create it into an actual sort of business structure. I'll be starting to push all of the paperwork. That's going to be probably a really hard, probably the hardest, if not the most annoying thing to deal with, is like just dealing with all of the paperwork, you know, owning a business. But I had a vision, and I capitalized on that vision, and I have to hold that, very dear to me, and I am. And this is a very powerful thing that I've built. It's a very powerful vision that I have, and for this moment, where physical metals, um, they're just reminded for people that are owning physical silvers or physical metals. Sorry, they are just now being reminded that the markets can unroute crypto on their own towards the upside, especially when the supply is getting squeezed. And now let's zoom out for a minute because from a single asset, let's zoom out from any one single asset for now and look at the global macro backdrop that's been forming during this window because between yesterday and this morning, it's been explaining a lot of why capital flow has been flowing the way that it has been. The IMF's latest World Economic Outlook update is projecting global growth around 3.3% for 2026 and 3.2 for 2027, with an S&P Global and other forecasters telling a similar story of steady but not exactly spectacular growth. And that's not exactly a crisis backdrop, but it is a world where investors are constantly balancing their moderate growth with their more elevated geopolitical risks and policies, uncertainties. And you can think Fed succession questions, uh, trade conflicts, and shifting fiscal regimes. These are the sort of things that are in play right now. And in that kind of environment, the market tends to bid up anything that looks like a reliable collateral or a structurally scarce asset. Now, which is exactly why gold and silver have been firm, even as some equity indices just finished this week slightly down or even flat. And for the silver buyers on my website, this means that you're not just trading a commodity, you're effectively making a macro allocation into an asset that has historically benefited when growth is just okay, but trust and policy and the current currency uh, is less than perfect. So for crypto users, a 3% global growth in the world with constant policy noise is definitely ideal for digital assets that can sit outside of the traditional banking rails, especially protocols like Solana that position themselves as a high throughput infrastructure for this new economy. And for my platform, the takeaway is that both sides of my value proposition, whether it be the physical ounces and the crypto rewards, they both fit right perfectly into this new macro equilibrium where people they want yield and exposure, which people do get by providing liquidity on my platform and verifying that liquidity, but they also want assets that can be printed by decree. They can't be printed by decree. the convergence of digital and real assets isn't just a slogan here anymore. It's an actual rational response into a world that looks stable on paper but unstable in the terms of political and monetary narratives. And this is a global response to the current situation and what's happening in America. And all right, so let's bring it back to the US equities because, we are the global reserve currency for the time being. Um, and over the last couple of sessions, because of how the stocks have traded, they tell us where the risk appetite actually is in the US markets. They ended this week either slightly lower or less, essentially flat, the same as I said before for the previous markets. Let me grab a quick drink real quick here. All right, so the Dow dropped around 0.5% on the week. Just because I want to get more familiar with these terms, let me look this up. What is the Dow? Dow Jones Industrial Average. Stock market index of 30 prominent companies listed on exchanges in the United States. The DJIA is one of the oldest and most commonly followed equity indices. Interesting. Very interesting. Okay. So the S&P slipped a few tenths as well of a percent, and the Nasdaq finished close to unchanged, with tech strength offset by weakness in financials and rate-sensitive names. Um, the headlines described it as a volatile week that ultimately went nowhere, which is usually what you see when investors are still in the game, but quietly rotating capital towards more safer and quality assets rather than chasing every single risk asset. So for silver buyers working through my website, this rotation is a key tell. When capital steps back from the broad equities but doesn't go fully to cash, it tends to reach for scarce collateral. And we just watched silver confirm the roll by breaking $100 with real volume behind it as well. So for the crypto users, the same pattern explains why the Bitcoin and Ethereum have been trading firm, but not exactly euphoric, and why the flows are more selective, with capital increasingly favoring narratives like Solana's high performance infrastructure over a purely speculative micro caps um, like Ethereum. And from my website, a sideways equity tape with a bid under hard assets, a sideways equity tape. What does that even mean, dude? Is an ideal environment. Anyways, yes, my website does offer a very unique approach to all of this. Um, I do reward my users with a very finite amount of uh, crypto rewards for my platform that I've created, and it has its own distribution system, like when you purchase silver or when you write books, or this and that and the other. But it's not exactly about the S&P 500, is what it's saying here. Um, it's also about owning things that benefit from these quiet rotations into scarcity and ownership clarity. So, yeah, I mean, So let's pull the camera back one more step and talk about the international pictures here, because Asia and other regions have been sending their own signals that also intersect with the silver and crypto story. In the last day of the headlines, we've seen commentary that Hong Kong's Hang Seng Index rebounded from the midweek slump to finish stronger, and the Singapore's markets, along with the gold and silver, have been highlighted as a beneficiary of a safe haven and quality seeking flows as well. And this tells you that this is not just a United States or European story. Investors, even across Asia, are also experiencing a preference for real estate and solid collateral in the face of mixed growth and persistent political friction. And at the same time, coverage of China's equity markets keep emphasizing the split between export-oriented and domestic demand-driven sectors, reinforcing the theme of a two-speed economy that pushes investors to be more selective and more hedged. For buyers on my platform, the relevance is very simple. The same industrial and monetary drivers that are pushing the Asian investors towards gold and silver are also the ones supporting my long-term thesis about tokenized ounces backed by real metal. And for the crypto users, the fact that the Asian markets are still very engaged in both the crypto trading and physical metals accumulation means that the global liquidity pool for these scarcity trades, both physical and digital, is a broad and deep play. So for my platform, this reinforces my positioning as a globally relevant website. I'm not just selling a United States retail product anymore. I'm participating in a worldwide shift towards assets that are combining real world scarcity with digital borderless ownership infrastructure, basically blockchain technology. And now let's connect some of that macro risk back to the real economy and the logistics behind it all. Because one of the themes in the last day's headlines has been severe winter weather disrupting air travel and operations in parts of the United States. A major ice storm is hitting the Carolinas, has already been forcing delays and cancellations um, throughout the Charlotte, Douglas, and other hubs. And that kind of disruption cascades into freight, staffing, and short term economic shortage activity. While this isn't a systemic crisis, it's another reminder that the physical supply chains are indeed fragile and that it's been a reoccurring theme in metals over the last few years, from smelting bottlenecks to refined product distribution. And for silver buyers on my platform, yet again, this is where the conversation shifts from uh, just price to where is my metal and how is it stored and how clean is my claim. A tokenized, again, it keeps saying tokenized, but the silver uh, ounces is not a paper promise on my platform. It's sitting inside of a complex um, distribution chain, which is a direct, um, you know, uh, I really don't like that whole sentence. It doesn't understand that I am not doing a tokenized. So I'm just going to skip that one. So for crypto users, these kinds of weather and logistic shocks um, echo something that we've already been understanding intuitively, that digital networks keep functioning even when the physical networks are seizing up. But they're most powerful when they're mapped to the real things and not just the tokens without any backing. I mean, that's somewhat true, but at least you're getting something, and you're owning finite supplies of both. when you interact with my website. So that's the whole thesis. Um, and the vulnerable real world bottlenecks, thereby turning fragility into more supply chains into a premium on secure, verifiable ownership. That's interesting. Use the robustness of blockchain rails to represent transfer claims. And that, you know what, that is very legitimate. We can verify the ownership using the blockchain, instead of yeah. But shifting gears just a bit, let me grab another drink. I'm gonna grab another drink. So let's talk about another real world market that's also been flashing some interesting behavior this week, or between yesterday and this morning. The agricultural commodities. The grain market commentary from yesterday pointed out that corn, soybeans, and winter wheat all caught a late week rally, driven by a mix of weather concerns, export flows, and positioning. Um, while that sits outside of the metals and the whole crypto universe, it does reinforce a broader macro theme that real asset supply chains, whether it be food, energy, or metals, are all operating within a limited slack, and the relatively small shocks can produce outsized price moves. For silver buyers plugged into my website, SolShotSilver.xyz, seeing grains pop on a seeing grains pop on a mix of weather and flow. Wow, seeing seeing grains pop on a mix of weather and flow reminds you that silver's own tightness isn't an isolated story. It's part of a broader world where the real materials with long lead times and finite supplies are indeed being repriced in. So for the crypto users, this is another argument for combining exposure to my website, where you earn the real silver being shipped to you directly, as well as the pure digital assets inside of a digital portfolio. And because the more physical world demonstrates uh, its scarcity, the more valuable it is to have a more digital claim that maps cleanly to that scarcity. For my website, it references these cross commodity signals, underscoring this whole philosophy that I'm not just offering the product, I'm offering a way to own a slice of the physical foundation as well of the economy. And I've wrapped it into a digital infrastructure that lets users own a piece of crypto or digital rewards for believing in that scarcity. And now let's pivot to the crypto side more directly now, because the last 24 hours of the headlines have been around more specifically Bitcoin, Ethereum, and the broader markets, giving us the other half of the story. So we've got Binance market updates showing global crypto market caps around 3 trillion, with the Bitcoin trading in a relatively tight range, still around the 88.5 to 91,000 range. Give me a moment. I've been talking a lot. During that last session, and it's just sitting under about $90,000 now. And as of that report, Ethereum has been holding near the 2900 zone, and Solana is trading the mid 120s, around 126 to 127. Um, you know what? I can actually look at my website. Let me just go to my website. Oh wow, what's going on? Oh, there it goes. So the price of Solana right now, $126.58. Wow. And the current percentage is for the arbitrage. Wow. That's so low. I mean, we got to see some correction here pretty soon. I mean, these percentages, they're low. They're really low. But let's continue here. Which continues the theme of alt layer ones. They are participating in the broader uptrend, but with less violent swings than they had just a few cycles ago. Despite that, well, actually, let me stop there. That actually shows that Bitcoin is legitimately becoming an actual store of value. Like it's literally holding up during what seems like an extreme deflationary period for the dollar, which is actually quite incredible. Um, Despite that, there are notes from analysts pointing out that Bitcoin has lagged in its relation to gold in its inflation hedge role recently. But um, it is indeed still on par. I mean, just many years before, it totally outperformed gold insanely, and people were talking about it like that back then. Um, and now, just because it's lagging a little bit, it's not meeting up to their expectations, which is kind of funny. Um, Even as crypto overall has had put in a strong multi-year recovery, um, it's not being seen as an inflation hedge again, which is kind of funny because it has performed very well and is holding up very well. So for these silver buyers, from my website, this makes my positioning very clean. I am sitting in an asset that just behaved like an inflation hedge and supply squeeze play at the same time. While the crypto holds its value, but doesn't need to carry the entire macro hedge narrative it's on its own because you're buying silver as well. For the crypto users, the practical takeaway here is that the holding of both Bitcoin, Solana, and silver claims um, create a or and silver creates a portfolio where the hard money function is diversified across the physical and digital rails. So for SolShot, these crypto metrics are exactly what I want to cite um, when explaining why my rewards are denominated in leading networks like Solana. They have a large liquid market, strong infrastructure narrative, and enough volatility to create quite the upside pressure. But based on my value proposition, still, it rests on a provable ownership of a very scarce metal. And now let's go into one of the more specific crypto stories that hit just within the last day. The ETF money rotating out of Bitcoin and Ether products and into Solana. The reports are showing that Bitcoin funds have seen notable outflows on the order of roughly $100 million, while Solana-linked products have been attracting fresh capital even as the overall crypto volumes dipped around 19%. So what that tells you is that the institutional and semi-institutional players are not abandoning the entire crypto theme. They are selectively reallocating towards the more high throughput chains like Solana that just generally look better positioned for the next leg of an on-chain activity and real-world integration. So at that macro level, this is very consistent with the idea that we are moving from a simple digital gold narrative to a digital infrastructure for a real world economy narrative, where the transactional throughput, composability, and the integration within real world assets as well as tokenized all matter. And for these silver buyers on my platform, this is necessarily a gift that I've been given. I've really capitalized and am now very present in the Solana ecosystem as well as the entire theme going on at play. I'm not just another volatile token, but as the backbone of the new financial stack that can carry tokenized silver settlements and reward logic at a much larger scale. And for crypto users, they are seeing ETF flows leading into Solana, while Bitcoin grinds sideways, reinforcing the entire logic of owning a mix of base layer hard assets like silver and also base layer digital infrastructures like Solana, rather than over concentrating on a single story. For my website, this ETF rotation entirely validates the choice to tie my business model with convergence of a physical scarcity asset as well as a digital performance asset. The customers own ounces, but their ownership and rewards are expressed on chain that global capital is increasingly favoring. So, speaking of Solana, let's talk about one of the more eye-catching altcoin stories from the last few hours. So, Solana-based focused tokens called Ghost is ripping roughly 60% higher after the team behind it announced Ghost Swap and a broader roadmap for the privacy infrastructure on the network. This is a micro asset, but it's a good example of how Solana's ecosystem is still innovating aggressively, rolling out new cross-chain and privacy tools and making Solana a more complete environment for real-world uses as well as capital, um, which doesn't really necessarily make sense to me because a lot of the narrative many years ago when Bitcoin first came out was complete transparency, that these corporations couldn't hide what they were doing anymore. And so when a token like a privacy token really takes off, is you're just literally repeating the same cycle over. Like you're giving these large corporations and these evil people that are using their power for evil, um, more power. And you know, that's the one of the many reasons why crypto was invented. Like period. Let me grab a drink. So let's see here at the macro level. This kind of activity for the Ghost asset matters because it demonstrates that Solana is not just a layer one with fast blocks, but it's a platform where people are seeking more complex financial logic, including privacy, routing, and cross-chain sentiment. Um, and it is being built. For silver buyers on the SolShot Silver ecosystem, the relevance is very indirect, but also very important. The more capable Solana becomes as an infrastructure layer, the more powerful that my tokenized silver becomes more as a programmable asset. I'm sorry. Let me the more powerful my silver becomes as a programmable asset on my website. I can think of conditional transfers, privacy aware. I'm not going to do any of that, honestly. Tokenized assets are a joke, especially in the world of like actual investing. Um, but for crypto users, the ghosts move is also another reminder that within the Solana ecosystem, there are high beta opportunities that sit on top of the more stable base of Solana itself. Again, I don't agree with privacy tokens. I think that you know it, transparency is key. If you can't be honest, you can't be you. You know, if you have to constantly lie and fucking beat around the bush about what you're doing with your money, you know, you're just scheming, man. That's all you're doing. You know, and uh I will quote Badass Dude Tracks. You're just scheming, bro. If you're trying to hide what you're doing with your money, you're just fucking scheming. All right. So, anyways, let's bring this into another piece of crypto narrative because prediction markets and the forward-looking pricing for Bitcoin, Ethereum, and Solana as of yesterday is looking quite bullish. As a recent brief on crypto prediction markets, they're showing traders currently seeing a high probability of closing January, a little bit higher, not much, but maybe around the $92,000 range, and Ethereum around well, it actually says here a bit lower, and as well as Solana. Um, so the sentiment is being described as somewhat cautious. Oh, okay, or bearish, it's saying here, despite the spot prices sitting at a bit higher in places. So this tells us that after a huge multi-year recovery, the marginal trader is not betting on blow-off tops in the immediate term. Instead, they are pricing in a range bound behavior. So the modest upside is the default, but for silver buyers on my website, this is actually very complimentary. So while crypto markets are consolidating, the silver has just staged its own breakout. So the balance of opportunity, um, so the balance of opportunity in the very near term may favor additional moves in the physical metals, while the crypto chops around still. So for the crypto users, this prediction markets are a reminder to treat forward reward flows as a long-term accumulation mechanism rather than a short-term trading signal. The SolShot Silver's ecosystem crypto rewards actually become a way to steadily build positions in the Bitcoin, Ethereum, or Solana ecosystem, while the crowd debates whether the January closes a few thousand higher or lower. And for my website, this weaves into the story that lets me emphasize that my platform is designed for a multi-cycle ownership, and it's not just a short-term speculation. My silver represents a long-term scarcity asset as well as the silver itself, and the crypto rewards represents a long-term dollar cost averaging engine into a dominant digital networks. Although I can never guarantee profits with anything that I create, um, it is still designed and built around reward infrastructure. And all right, I'm going to be zooming out now on the crypto again, but let's just touch the whole which coins will matter in 2026 narratives. So they've been circulating, and this also ties directly into my reward design. At least that's what it says here. Let's see what it says. Several pieces from the past week have highlighted that Bitcoin, Ethereum, and Solana are indeed the leading long term plays for this cycle, emphasizing that their track records their network effects, and their balance between growth and established infrastructure is there. And these aren't just meme assets, they are treated as more core pillars of the digital asset universe, with everything else largely being benchmarked against them. And for the silver buyers on the SolShot Silver ecosystem, this emphasizes the digital side of my conversion. At least that's what it says here. Let's see what it says. I don't need to convince someone to care about dozens of obscure tokens because you can focus on literally 3 networks, and the market already considers that already considers structural. For crypto users, this list is very familiar, but for the twist that my website provides is that my exposure to these networks is tied to an underlying real scarce commodity, which is silver, and that the market is repricing in real time at this moment. For my website, aligning my reward structure with this triad of Bitcoin, ETH, Sol makes the convergence of digital and real assets very concrete. Give me one moment. So I'm literally pairing ounces of silver with a real reward that scales um, in 3 different networks that are most widely recognized as digital scarcity and an infrastructural play. So it gives my website an actual foothold in the future of this whole AI revolution, EVs and solar. It gives people a clean, legible bundle, providing real metal plus a crypto, which is no noise, no noise, no fluff website. That's what you want, you know. And let's hit a headline that sits at the intersection of a corporate treasury management and also crypto. So GameStop, if anybody's ever really looked into GameStop, it's moving its entire Bitcoin holdings to Coinbase Prime, which is sparking speculation about potential sales. On the surface, that's just a treasury operations story, but it carries a heavier implication. When public companies concentrate their holdings at major custodians and trading venues, it's often because they want the flexibility to sell, collateralize, or even otherwise mobilize that stack. At a macro level, this is a small reminder that the corporate crypto holdings are not just static. They can become a supply on the markets themselves, or they can become a long-term locked collateral that is backing new types of instruments. For silver buyers on my website, this is a contrast worth highlighting, that my silver allocation is not sitting on a exchange linked custodian waiting to be market sold. It's sitting in a literal vault and designed for long-term ownership for its users. This is not a quick treasury optimization when it comes to my website. This is a legitimate real ownership. For crypto users, the GameStop story becomes the importance of understanding who actually owns the coins on chain and where selling pressure can arise from, which is precisely why pairing crypto rewards with my silver ownership can feel more robust. My core asset is not a corporate treasury position, but my own physical metals themselves. For my website, this corporate treasury angle helps me position my silver as a different kind of reserve asset as well as the rewards token itself, one that can be represented digitally and integrated into modern rails without necessarily being subject to the governance and liquidation dynamics that corporate crypto stacks also face, or not also, but they face uniquely. Let me get another drink. This is a lot of talking. If y'all like what you're getting, like the video, please subscribe. It'd be really helpful. All right, so let's go back to gold and silver for a minute as a whole category because the weekly reviews are out over the last day, and they are emphasizing that a safe haven bid has pushed gold to new highs, while silver has experienced sharp, sometimes violent swings on either side of the $100 line. So, the analysts keep stressing that this rally is indeed supported by strong fundamentals, multi-year deficits in silver, robust industrial demand from green energy and also electronics, and persistent investor interest in both metals as alternative stores of value and the world of policy uncertainty, which is a hot topic right now. At the macro level, the combination of safe haven buying and industrial demand is exactly what differentiates silver from pure financial assets. It's both a hedge as well as a critical input, uh, which means its scarcity is reinforced from two different sides. For silver buyers on my platform, this confirms that my ounces are not just a bet on fear, but they are a claim on real long term demand from the physical economy. And for the crypto users, that's conceptually similar to owning a real base layer token that both secures the network and pays for your block space. The value accrues from both security and also the utility. From my website, that analogy is very core to the entire platform philosophy that I created. I am packaging a dual engine asset, which is physical silver, into a tokenized form, which is Silververse token. And that's what the users get rewarded with, that can live on the same rails as Solana, and it's rewarding its users in the very networks that are building the infrastructure for the next generation of finance. And now, if we loop this back to the US equity volatility for a minute, because some of the more dramatic commentary in the last day has pointed out quickly that the market cap can evaporate in a single session. One recap flagged that the S&P 500 managed to wipe out over $1 trillion in market cap in a single day earlier in the week before clawing some of that back in the subsequent bounce. This kind of down hard then grind back behavior is typical of late cycle equity actions. The capital is still very present, but it's very jittery and quick to run for the exits while the headlines are turning. At the macro level, this reinforces the case for holding assets where supply is not tied to the entire corporate earnings or share issuance, but more or less like things like physical silver or base layer crypto tokens with known issuance curves. So for silver buyers on my platform, this contrast is very simple. My ounces of silver don't lose to trillion-dollar valuations in market caps simply because an index ETF gets hit with redemptions. They sit in a vault where they are finite and they now trade in a triple digit world where each dollar move is actually more meaningful. For crypto users, it's a reminder that while tokens can be volatile, their supply dynamics are very transparent in a way where that most equity issuance cycles aren't as transparent, which is why pairing them with silver can make which can make people's portfolio feel more grounded. For my website, this is where the ownership language really matters because I'm not providing exposure to a price series. I'm giving them people direct ownership of a scarce physical asset, providing programmable exposure to the digital networks as well, which is the very different thing from owning a slice of a broad equity index. So now let's touch on the forward-looking equity narrative because there's a lot of talk about where the growth and leadership are likely to come from in the next few quarters. Commentary over the last day highlights that defense and AI infrastructure remain clear winners, while investors are watching the upcoming earnings from mega caps like Microsoft, Meta, and Apple for signals on the durability of the AI trade. And that's very important because it tells you that equity investors are concentrating its risks into more narrower groups of perceived must-own names, which historically increase fragility if anything goes wrong with those narratives. For silver buyers on my website, this concentration risk in equities is another argument for holding a portion of wealth in an asset that doesn't require or depend necessarily on a handful of tech companies successfully monetizing AI. My silver doesn't care whether a particular model or chip wins. It's just pure scarcity and industrial utility and demand that are independent of that outcome. And for crypto users, this tension between these centralized equity winners and decentralized digital networks are very familiar because it's why protocols like Solana matter. They provide open infrastructure that don't rely on single corporate earning calls. For my website, mapping my silver to these open networks mean that my users get exposure to the real upside of decentralized infrastructure while also anchoring their wealth in something that sits completely outside of the AI hype circle. So if we take a quick look at the global economic forecasts again, because they do provide the backdrop for this move in silver, it is a blow off or a start of a structural repricing entirely. Let me grab one more drink before I continue. This is quite the report that I'm reading. A lot's happened. Lots happened in the past day. So both the IMF and the S&P Global are effectively saying the same things right now. That the global economy is expected to uh, grow at roughly the current trend, around 3% throughout 2026 and 2027, with resilience in activity despite policy shocks and trade disputes. So this means that we're not pricing in an imminent depression or an explosive boom. We're pricing in long-term periods of good enough growth under a cloud of structural tensions. And in that environment specifically, hard assets and digital scarcity both tend to do well over time because they serve as hedges against policy error, currency debasement, as well as um, fractured geopolitical or geopolitics rather than against outright economic collapses. So for silver buyers on my platform, this is exactly the macro environment that the allocation is tuned for. It's not the end of the world hedge, but a rational response to a world where the growth is fine, but the trust is thin. And for the crypto users on that platform, it means that the next phase of the market is less about the up only, but is less about up only because everything is broken, but more about the steady adoption of single digital assets as part of a diversified portfolio, which does align well with my website's reward structure. For my website, this forecast tells us that if I frame my entire offering as a long term run allocation decision, owning real assets as a core scarce theme, as well as accumulating crypto rewards across the various cycles, and let the convergence of digital real assets work in my favor or for my users' favor over the decades rather than just a few weeks. Now let's come back one more time to the precise price action in silver, because actually I'm going to pause here. I've been talking quite a bit. I'm just going to let my chat talk. If anybody's in the chat and they want to ask me a question, I'm just going to chill out for a minute because my voice is very tired. All right, we're going into intermission. So, intermission.
In the lab, I'm a chemist, align on my element. Digits multiplying, I'm stacking the evidence. Silver chain gang, lean strong, never hesitant. Air growls loud, but I'm bullish, so relevant. My dips like a shark on a feeding spree. SolShotSilver.xyz, that's the creepy me. Turn lows in the eyes, watch the symmetry. Diamond hands scoping destiny so vividly. SolShotSilver shining in the dark. Visionary moves, I'm igniting the spark. From better bull, no one they remark. Silver chain gang, leaving a mark. Yeah. Hustle quantum, my ledges encrypted. Yeah. Future minute, no permission restricted. Yeah. Bear market blues, now I'm optimistic. Yeah. Blueprints drawn, every move's ballistic. Crypto ain't a code, but my wallet stay heated. Broke the chains and down, my success undefeated. Every point I hold got a story repeated. Solana waves rise and my mission completed. Stack silver bricks, watch the fortress grow. Shimmer like stars, got that visionary glow. Chain ain't worldwide, we the newest growth. SolShotSilver, yeah, you already know. Moonlight dancing, silver's flow so pure. SolShotSilver, wealth's true allure. Chain swing head, they don't break my stride. Silver chain gang, true where riches hide. Metal mirrors, show the flaws in the fame. Reflection deeper, not a surface game. And the light burns, brighter than the stash. Confidence mentioned. Can't fake that cash. Silver shows the truth, no lies, no shame. Chain gang rising, rewriting the game. In a light shining, wealth ain't nothing. SolShotSilver, the world knows the name. Coins swing softly, symphony of game. But the shine ain't worth it. If it goes brain, stack the bars, not scars. Keep the mind refined. Polish up the soul, watch the purpose align. silver streams flowing, rivers of my thoughts, wealth ain't in the middle, it's the lessons taught, see yourself clear, past the blinking glow, silver's reflection, the only truth you know, mirror, mirror, tell me who I be, not a man go, but the one that's free, shackles of illusion, breaking with a glance, silver sets me free, gives us all a chance.
Yeah, digging through my dome, call it mental excavation. Thoughts on the treasure, that's a rich translation. Silver veins in my skull, blueprint of creation. SolShotSilver shine brighter than a constellation. Pages like a minefield, every word explosive. Chain gang with them links tight ferocious. Right into wealth, proof of work in motion. Turning to currency, ocean of commotion. Silver chain gang, we don't break, we bind. Proof of wisdom in the ground, wealth in the mind. Ideas been in the four-state divine. SolShotSilver.xyz refined. We shine. Thoughts raw like ore, but that's when I'm clean. Every verse a gem, cut sharper than a guillotine. Every missed pen, I touch with the unseen. Words stack wealth like I'm in a dream. Focus, lock, laser beam ambitious. Every bar go lyrical precision. I write to live, I live to write the vision. Silver tongue slicing through the indecision. Silver chain gang, we don't break, we bind. Proof of wisdom in the ground, wealth in the mind. Ideas been in the four-state divine. SolShotSilver.xyz refined, we shine. My wallet got a glow, blockchain on my wrist. Solana move fast, you can't catch the drift. Silver chain gang, shining lunar eclipse. URL flex, SolShotSilver, don't miss. No sync, smooth data flows in my veins. Charts on my screen, I'm the bull run sage. Foresight, shortcut through the market haze. Digits stack tall, never minimum wage. SolShotSilver, the shine and the glimmer. Crypto waves rise, I'm the big fish swimmer. Solana moves swift, while the rest stay bitter. Silver chain gang, yeah, the future delivered. Candlesticks dancing, my vision precise. I flip tokens quicker than Vegas dice. The 808s rumble, I'm the algorithm knight. Silver links heavy, no room for the light. Decentralized, well, my castle in the air. No gatekeepers here, just code that's fair. I'm a prophet of the prophet, the cycle I declare. While they chase the hype, I'm already prepared. Proof of stake, proof of game, proof I'm winning it. Market spinning, still grinning, just beginning it. Proof of stake, proof of game, proof I'm winning it. Market spinning, still grinning, just beginning it.
Okay, that was a nice rest. My voice. My voice is very worn out. So it's saying here right now, at a macro level, the prices right now for silver are just a it says here, if silver consolidates above $90, the decade-long conversation about it being perpetually undervalued is effectively over. That's what it says here. For the silver buyers on my platform, that's very critical framing. If we are no longer just buying cheap metals, then we are buying uh, real asset in a market that has structurally accepted three-figure pricing. And for the crypto users, this is the kind of repricing um, in the metals is equivalent of a protocol breaking new all-time highs and then building a base at a level that looked unthinkable just a few years ago. Something like Bitcoin's done over the past, 5, 6 years. But something like Bitcoin and Solana, the holders have experienced that multiple times, and that's true. For my website, these specific levels give you the hard numbers to anchor my story around. Yeah, so I mean, it's just the if it can't break above $90, that's pretty much the base. Um, Probably going to go back over 100 at that point, but it's hard for me not seeing this come down at the same time. Like it's got to come down at some point, right? That's what you would think, but who knows? We're in very unprecedented times. Like people who own silver right now have technically more a lot of buying power throughout the world, as well as gold. They own gold, you know, great metals, um, like like real asset holders, people that actually own things. And like even if you own Pokemon cards, like all these people online, they uh they own these Pokemon cards, and it's like you could use that as a sort of currency, technically, because it has value, you know. But it says here that the live data is putting Bitcoin near 88.5 and Ethereum around 29.5. Let's see here. Pretty accurate. Yeah, let's say. Yep, that's accurate. After all the periods where BTC traded up to about 89.6 and the global market cap hovered around 3 trillion, those numbers show that in markets that are elevated but not in full mania. I'm going to skip over this one. It's going over a lot of prices. Yeah, I was towards the end, anyways, of the whole report. Um, Wow. So I guess I am going to read these last two, simply because they do say, good things. So let's tie in more cross market pieces, which um, there's some commentary noting that silver's breakout through $100 on a percentage basis outperformed Bitcoin over that same short window, uh, which was driven by solar panel demand, also a historical supply squeeze, as well as persistent deficits. This is very important because it challenges the assumption that um, the highest upside always lives exclusively in the digital assets, but sometimes when the physical balance gets tight enough, the real world commodities can deliver crypto like returns over compressed time frames. And at the macro level here, uh, that's exactly what we would expect when we've had years of underinvestment collide with structural demand growth and a renewed interest in the hard money assets as monetary hedges. So for silver buyers, especially with my platform, it says here that this is a validation that my asset isn't, or that my website isn't just about stability and slow compounding, but also under the right conditions, it can be a leader in the entire hard money complex, which is actually a pretty insane that I've capitalized on this idea so well. Um, wow. I'm actually kind of proud of myself that I understood that that was such a great idea at the time to do, and I capitalized on. I used my knowledge, dude. I used what I knew. I'm proud of myself. If I'm ever proud of myself, I'm proud of myself for that. That's a good one. That was a great idea, man. So if token mapping uh, is to some sort of ounce of silver, it can technically participate in moves like this while also still being fully backed by physical silver. And, it's a very powerful thing to set. It's a very powerful addition to the set of things that I can own on chain for my website. And this narrative that I've built lets me position my platform as a way to capture the crypto style upside in an asset class that is fundamentally anchored to the physical realm, and it's on industrial use. And um, with my crypto rewards layered with that, it keeps users engaged in the broader digital ecosystem as well. And so yeah, I'm gonna read this last paragraph, or this last section, which connects everything back to my website, and to close the loop on why the last 18 to 20 hours of headlines matter for my business specifically. And on one side, I've got silver entering and testing triple digit pricings, with analysts talking about the structural deficits, supply squeezes, and possibly pullbacks that don't change the long term bull cases. On the other side, I've got the crypto markets sitting near the top of their multi year ranges, and with capital rotating towards Solana and other infrastructure plays, the ETFs shifting allocations, and the predictions markets are pricing in more cautious but yet constructive uh, forward paths for cryptos like Bitcoin, Ethereum, and especially Solana, which I deal with in my business. And all over that, the macro backdrop is a stable growth with unstable narratives. Um, the global GDP around 3%, but the constant noise around the current policies, the politics, and the geopolitics um, is raining quite heavy. And in that world, the core of my website value proposition lines up just about perfectly with what the market is telling everyone of what it wants. It wants direct, tokenized ownership of a real world asset that you can hold and has just proven it can be repriced violently towards the upside, which is favorable for my business model. Now, combined with the ongoing crypto rewards in the very networks that institutional and retail capital is continuing to favor, for silver buyers, I am providing an on ramp into the vaulted silver that lives in the uh, triple digit asset classes now. Um, with a fully digital and traceably fully digital traceability and clear ownership. Yes, and just so anybody, if anybody's curious about how my website works, I can definitely explain if anybody has any questions. I really haven't been asked too many questions about my website. Um, but it is sort of a tokenization process. I technically, yeah, I've built a very amazing. I could frame it that way, you know. I mean, technically, people are getting the real thing when they order silver. I mean, the tokens are a reward of using the platform and its features, not necessarily just for purchasing silver. So there's that. Um, but purchasing silver does give you a unique opportunity when trying to accumulate these tokens rewards because of the arbitrage opportunity, which is effectively when the price between Solana and silver are at its greatest and it meets it's within the past all-time highs. That is when the arbitrage rewards activate on my platform. So when the purchasing conditions are favorable for silver, the arbitrage rewards will activate. And this isn't financial advice, by the way. I'm just saying, in my mind, this is the way that I envision it. So that's the way that I built my website, my ecosystem. And yeah, so those will activate and you get 1.75 times more tokens than you would have normally if you were to have purchased silver. And the tokens that you get are a 1-to-1 ratio of the dollars that you spent. So, for instance, if you spend like money, if you want to buy 1 ounce of silver right now, you would get. Let me just look at my website here. You would get 126 SBT tokens because it also factors in your shipping costs. It also factors in your premiums that you pay. So the amount of SVT tokens, or should I say the tokenized silver you will get, is yeah, it scales accordingly, appropriately. Um, it's kind of insane right now. You need almost one entire Solana to purchase 1 ounce of silver right now, and that's actually kind of an incredible ratio when you look at my website. But anyways, where was I? So my website's value proposition lines almost perfectly up with the market is telling us that uh, real world scarce assets are proven that they can be repriced. Yes. Um, okay, so I'll end it with this. So for crypto users, if you're turning your appetite for the BTC, ETH, and especially the Solana into something, if you're looking, okay, let me just say this word for word because it's very specific. You are turning, I am, okay, it's like it's talking to me and I'm trying to say it like a script. Okay, so I'm turning their appetite for the crypto basically into something more than just a bet on the price. I'm trying to stream, create a stream of rewards funded by the participation of the purchase of the physical silver, as well as other um, parts of the ecosystem. And for that on my platform, the last day of news up until this morning, and since I did my research previously, is basically a live fire demonstration of my entire thesis that my convergence of digital assets and also real assets isn't just necessarily theoretical anymore. It's literally where all of the money is going. And I'm doing my job now to simply keep presenting that convergence in a calm, precise manner here on YouTube. If you do like the video and you do like this sort of information, please subscribe and that would really help the channel. Um, I'm not necessarily I don't like numbers too much, um, but I am a numbers type of guy. So if you all want to know about how this explains how the dollar could retain its value as the global currency. Um, we could talk about that for a minute. The end of the dollar conversation, but uh, there's a very real scenario where the dollar may actually hang on to its role as the main global currency for quite some time to come still. In the last few days, we've had people from the Davos specifically stating that exactly that economists were pretty clear that yes, the dollar faces political and debt risks, but there is still no immediate and also credible replacement for the dollar as the core reserve currency. And at the same time, the IMF data for the third quarter of the 2025 shows that the dollar's share of the global FX reserves is still sitting at around 57%, with only a tiny quarter to quarter move. In other words, there's more talk about de-dollarization than there is actual rotation in central bank reserve books. And so even though the dollar's share has driven down over the decades, in practice, most of the world is still running their balance sheets in dollars, and that will remain until some definitive action has been decided. But here's what else just came out of the matters in the new BIS FX survey. It shows the dollar on one side of roughly 89% of all of the currency trades here in 2025. That's actually up a bit from the 2022%, not down, which is positive. And the TD economics piece that dropped this week basically sums it up as a down but not out scenario. And their line is that getting rid of the dollar as the central reserve and trading currency really just isn't realistic right now in the foreseeable future because there's no currency that has the same combination of deep markets, liquidity, legal protections, and also global usage. And another look at the recent IMF reserve data from the December framed it from the same way. The shifts make a lot of noise, but the dollar share in reserves is broadly steady when you adjust for the exchange rate moves. So when you're putting that all together, the picture you get is a currency that is under scrutiny, but still absolutely the central to how the plumbing of the global finance structure currently works and still operates. So now, the latest Morgan Stanley and policy commentary adds an important nuance. It states that saying the speed of any de-dollarization shift is going to depend heavily on the U.S. policy choices. The debt discipline, how aggressively sanctions are used, whether alliances are indeed maintained, and whether the United States institutions are predictable or not. And the Bank of England policymaker has made the same point recently, using the British pound as a warning case when the country retreats from alliances and its global leaderships. Over time, its currency role can definitely erode. And if you're asking, how does the dollar actually keep its status? And the answer is kind of simple, but not exactly easy. Washington has to keep debt and inflation credible. It has to avoid weaponizing its own currency so aggressively that everybody doesn't want anything to do with it. It has to learn to keep friendships and alliances and its security at the forefront of its architecture, and it needs to make holdings dollars feel more like a broader safety package than what it's being represented as today. And here's what that means in practice for the dollar um, if it does hold its role. If the US keeps its fiscal path at least somewhat believable, if inflation is managed so that the dollar loses value slowly. Sorry, give me a moment. If uh, if inflation is managed so that the dollar loses value slowly rather than in big shocks, and if the Fed is allowed to act independently without constant political interference, then central banks and big institutions have strong incentives to stay within the dollar system. Give me a moment, I need a drink. I'm actually almost done with the live stream. I've only got a bit more to go here, so let's keep to it. So, the central banks, they still get the deepest bond market in the world via the treasuries. Um, they still get the most liquid FX uh, and also derivatives markets, and they still get the best legal system and the rule of law uh, for all of its current flaws. And it is more predictable than many of the alternatives. And in that scenario, you don't see much of a sudden collapse in the system. You see what we've already have, which is a slow drift in margins and into necessarily other currencies, and also stuff like into gold and silver, which is largely part of the reason why even I created my own website, and why I was like, okay, let's start doing something about this. So, but indeed, the dollar remains the backbone of the traditional trade invoicing, global funding, and also the reserves, which is extremely important when you think about the financial system. So having reserves is very important. That's all I'm saying. So like, if anything about the Keynesian style of economics is correct, reserves are indeed correct, in my opinion. So why should you care about that if you're focused on if I am focused on silver, Solana, and also the crypto markets? Because where the world dollar survives as the main global currency, it is actually the base case that I want to be planning around. Because if the dollar stays the core unit, that means that the global trade, commodity pricing, and also the risk assets will still be referred to and deal in the US and US dollar. And that also means like all of our current monetary policy and legal and judicial system, which is quite fair when you try to use it for what it's used for. If the dollar stays as the core unit, um, that means that the global trade, commodity pricing, and yeah, like I just said, will still be referenced in the US and US dollar and all that. But my silver ounces will still be quoted in those dollars, and that's technically where where I'm like really starting to look at the differences in the global trade. If I'm going to be selling my silver to somebody who lives, let's say over in Europe, I have to get European prices for their currency. And that's why I haven't necessarily opened up my website anywhere outside of the United States. So that's why I care about the US dollar. And my Solana rewards, they will be, they will still be my my Solana rewards. No, it's my rewards for my platform. It says here will be mentally translated back into dollars. So it's just talking about the psychological impact of um, maintaining the U.S. dollar and how that really all plays out when like people are trying to check out. Um, Yeah, I mean, if I were to open this up globally anyways, I would have to pull pricing, like based on real exchange rates. But okay, so let's just skip ahead here. And the people that okay, it says here the people that I am talking to now are not moving to some new currency regime tomorrow. It says here that my research is saying here that you all are trying to figure out how to protect your purchasing power inside of a dollar centric system that might quietly inflate and give out over time, but doesn't fully break, which is actually quite poetic when you think about it. Like growing old gracefully, you know. Um, so here's the deeper meaning of the context of my business for my website is even in this even in this whole dollar stays king scenario, I can already see central banks behaving like my ideal customer. For the first time since the 1990s, when I was born, foreign central banks now hold more value in gold than in US treasuries, roughly actually $4 trillion in gold versus about the 3.9 trillion in treasuries, not because they think the dollar disappears tomorrow, but simply because they want a hard non-political asset sitting alongside their dollars And that's exactly the behavior that I am encouraging on my website on a but just on a much smaller scale. I'm keeping my dollars away from the everyday life and everyday political tension, but the store of a but store instead a portion of your wealth instead in a scarce real asset like silver. And then you layer on the crypto rewards on top of that and the potential liquidity as a parallel digital asset stack, and you have a real business model. So for the silver buyers looking at this, the message is very straightforward. I don't want I don't need the dollar to collapse to justify owning metal. If the dollar retains its role, but the US runs persistent deficits and allow the constant inflation, then holding some sort of net worth in something physical like silver is just a way of owning something that the Fed can't expand with in a balance sheet decision. My ounces on the SolShotSilver ecosystem.xyz is still priced in dollars just for convenience purposes. But if someone was visiting from, let's say, the United Kingdom, they would have to be purchased or priced in euros. And just as we've seen with the silver, just over $100 with the world repricing in hard assets, my website isn't waiting for a formal end of the dollar just to announce it. And for the crypto users, a strong or at least persistent dollar doesn't kill my story either. It reshapes my story. A dollar centric world with capital controls sanctions its risk and political noise. And that is exactly the kind of environment where parallel programmable value systems like my website and Solana, which is why I built on it, thrive. And it's not because they replace the dollar, but it's simply because they let people move, collateralize, and express their value in ways that aren't fully constrained by the banks and borders. The best in slot data showing the dollar on, I don't know what that is, BIS data, best in slot because I'm a gamer, is showing nearly 90% of the trades are telling you that the fiat base layer is still in USDC and the crypto rails is sitting right on top of that. So giving users traditional freedom as well as optionality rather than a wholesale swap of unit accounts. And for someone using SolShot Silver, which is my website, .xyz, getting paid in Solana or other cryptos for holdings of silver is basically a way of plugging into that very parallel system while still living in a dollar priced and centric world. From my website and as a platform and as a business, this is where my positioning is actually very clean because I don't have to sell a doom of the dollar. All I have to do is make what I'm doing just make more sense. The research that we just walked through points to a more likely path where the dollar dominance is slightly more volatile, but it's where the trust is occasionally shaken, but not also destroyed, and also where big institutions are quietly diversifying into hard assets and alternative rails without completely blowing up the old system. It's my platform is in that world, and my pitch is basically very simple. Um, I keep using US dollars, right? But they don't rely on them specifically for that long-term security. I own um, a tokenized asset, which is called Silververse token, and it's like my version of a tokenized asset, but people get the real thing when they purchase from my platform. and they get the real scarcity anchor. And earning Solana and other crypto as a digital security layer is just the value layer that I add on top of that. So I let the dollar remain the measure stick, which is fine, but I am making sure that my wealth in my business and for my consumers aren't entirely a function of what happens to one measuring stick over the next decade. So basically, just the US dollar. And that's how the story of the dollar stability, as well as the dollar, as well as silver scarcity and crypto rails, are all fitting together on my platform in a credible, research backed way every day. So if you want this kind of stuff, please subscribe if you found value in this stream. Please subscribe and like the video.